So hi traders. So today I've got a special guest. I have Paul Scott, one of the traders and one of the speakers at our last event at Traders Day Live. So Paul, thank you very much for coming with and sitting with me today just to have a bit of a conversation, a bit of a sit down.
Yeah, no worries, Alex. Yeah, and thanks for you guys for inviting me to Traders Day Live. That was good fun.
Yeah. How was it?
Yeah, it was good fun. It was nice to be able to talk to people as well, sort of after you've done, the presentation and things like that, and to just, I think for a lot of them, they hadn't heard anything like it before, and I saw a lot of, people's eyes popping and things like that. And I had quite a few people get in contact with me afterwards to just say, look, thank you very much for giving a very open and honest sort of presentation and not banging on about indicators and trend lines and all that malarkey, and actually just saying, look, this is what happens on a trading floor, which of course is totally different to what happens
yeah, in real life.
In the retail market.
Yeah. So that's why I wanted to bring, because you and I had a conversation as well, and I was quite taken aback at the difference, obviously, the way that retail look at everything and the way retail have been educated to the way, obviously, you were educated when you first got into the industry and you first started trading on an institutional level. So I'll let you just give us a little bit of background about how you got into trading, because your trading, you got into it in a very unique way. I think it was your father who at first was in, and then you got into it through him. But I'll just give it to you and you can tell us a little bit about your background, how you got into trading. We'll take it from there.
Yeah, sure. So, I mean, yeah, like you pointed out there, yeah, my dad was a trader on the London Metal Exchange, predominantly trading copper and nickel for many, many years. And then at the age of 16, I've said this many times before in interviews, but, at the age of 16, he basically said, what are you going to do with the rest of your life? And of course, at the age of 16, I didn't have a clue at all.
Yeah.
I didn't have anything, I love my music. But as he said to me on many occasions, music's not going to pay the bills, boy. You need to get a proper job. So he basically took me up into the city. I went to work with him, his company, Unlearn Metals, for a while. And he said, look, just come in, get some experience, see if you like it for a start. If you do, we can, sort of look to get you a job with another broker or another bank, and we'll sort of take it from there. So, yeah, I was with him for a while, and then an opportunity pops up at Credit Lyonnais Rouse, who were a Category 1 LME member, so they had a physical presence on the trading floor. Not really an interview per se, it was more of, right, I want you to come and work for me, stop working with your dad, turn up at the office Monday morning, number 5 Appold Street behind Liverpool Street in London. Turned up at Credit Lyonnais on the Monday. Obviously had a little bit experience of the market, but was still very, very green with it. Got in there, completely new, team of people. Some great people there, some great characters. We had a boss, Graham Scrace, who had come across from soft commodities markets. He was our boss. Again, another character. But I got pulled aside. I mean, I was literally there about 10 or 15 minutes, and the guy that pulled me aside was, the bloke that was there the day I was born or the day after I was born. Mum's got a picture of it in the, photo album. Mm-hmm. And he basically took me aside and he said, look, boy, you've got 3 months. If you don't get it after 3 months, I don't care whose son you are, you're out. So 30 or nearly 30 years later, I'm guessing I kind of picked it up. So, yeah, it's very, sort of unique way to get into the market. But from there, Credit Lyonnais, stayed there for about 3 years, 3 or 4 years, and then moved across to what is now known as Sugden Financial. It was known as Sugden then. Got there, I passed my FCA regulatory exams, which allowed me to then speak to clients, offer them advice, trade on their behalf, trade with the company's money. And sort of was down on the trading floor there. From there, so there were different people that sort of had their own, desks, I would say, within Sugden. So I was there for a while on the trading floor, and then another bloke upstairs called Ivor Howes said, right, I want you to come and work for me. He did have a guy that he was working with, a guy called Mark. He left, and he said, right, I want you to come and work for me. So I said, right, okay. So left that desk, joined this desk. So predominantly the one I was on before was just non-ferrous metals, so London Metal Exchange contracts. Then I move across with Ivor, and now we're foreign exchange, soft commodities, hard commodities, non-ferrous metals, precious metals. So we were trading and broking a heck of a lot of different things. But then what that just brings to the table is that regardless of what you're trading, it's all done on the same basis, which is you could call it supply demand, you could call it cheap and expensive, you could call it wholesale and retail, whichever one of those makes the most sense to people. That's how things are traded. Always have done and always will be, regardless of what people say in the retail world. That's how it works. And it is actually really rather simple in its makeup.
Yeah.
So then after there, sort of went to other places, Societe Generale, Natixis, Standard Bank. Did a little bit of a tour around some of the brokers and banks and stuff like that. And then after the financial crisis, I just decided I've had enough of this. And sort of left the city, did a bit of consulting work for a company that was doing stuff on the London Metal Exchange.
Yeah.
And then basically, again, just didn't do anything for a few years, and then kind of totally stumbled into teaching retail traders what it is that, we do on trading floors.
With your education, obviously going in, when somebody says green, for a lot of people that don't know what green is, just newbie or somebody that doesn't know what they're doing, or just is totally new to something. So when you were quite green and you got into obviously on a desk, or you started learning, what did they even teach you? Because the stuff that you get taught today, you jump onto YouTube, it's support resistance, or it's trend lines, or it's MACD, or it's, I don't know, ICT concepts. I don't know if you've even heard of ICT concepts, but there's a lot of bombardment of a lot of different things that kind of complicate something that you say is so simple and so simple. So what did you get taught to the difference between maybe what retail gets taught today?
Well, you got to think about it. And I mean, I kind of alluded to this in the sort of the presentation that I did. So if for the retail guys, essentially you're playing a simulated game of the real game, if that makes sense. So the way in which retail traders look at markets, like you said, with all these different concepts and chart patterns and trend lines and indicators and all stuff like that, that there in itself are basically their analytical tools. Now, for me, that's what analysts use to basically produce reports that get sent out to clients. That's what they're there to do. That's their job. So they could sit there, they could spend all day trying to find, one piece of analysis that fits a particular story or fits a particular move in a market. Of course, that's not what we're taught to do, because we understand that that's an analyst's job, but that's not a trader's job or somebody that works, on a trading floor. So, I mean, sort of the first things that you were taught are various different prompt dates. So cash would be 2 days forward from today. On the metal exchange, 3 months was a huge contract, and one of the probably the most traded contract. But then you were also taught that you can trade between cash and 3 months. Every single one of those days, obviously excluding bank holidays and weekends, they can all have a completely different value. You're talking contangos, backwardations. You're talking about spreads. You're talking about, working out P&Ls manually. So this is, before computers could do it for you. So you sit there and do that manually in the morning. It's basically just building up your knowledge of how these markets function, of course. And then as you get a bit older, you start to sort of expand your knowledge in terms of, what is the market really made up of? It's made up of particular price levels. So if I was to say to you, market's range, and we forget trending and things like that, the trend is your friend is rubbish. You only like it because it rhymes, right? That markets are split up into ranges. And these are the historical ranges. So if you're looking on metals, I can go back, Jesus, if you had all the the technology and the pricing, you could mark that all the way back, I don't know, maybe up to 1900 or something like that. Or if you looked at the foreign exchange market, you'd trace it all the way back to the inception of free and flowing currency rates back in the early 70s. So you're looking at the prices and understanding, right, all we're going to do is range between them.
Mm-hmm.
So if you were to say to yourself, right, the bottom of the range is cheap, the top of the range is expensive, all we're going to do is play out in this range until something changes to make the value cheap at the bottom become expensive, or the value expensive at the top to become cheap. Now, you've got various different factors that can make that happen. You might have a natural disaster. You might have interest rate rises or cuts. You might have a piece of unexpected news. You might have something scheduled news that comes out, but it changes these valuations. And then all you do is you then play out in the range further down, or you then play out in the range further up. Now, when you look at charts, it's literally, it's so simple. I say to people, look, it's just a completely naked chart. It's a horizontal line. And all you're looking for is 3 candlesticks that can only ever do one of 3 things. It's that bloody simple, right? So when you start to look at that as a younger person, and you start to just, essentially mark these levels up on charts, it's like, right, well, I know where I want to trade from before the market gets there. And if all of the guys around you are essentially thinking in the same way and have been taught in the same way, then that very much explains why when you get to particular price levels, the market's going to have a big reaction, because everybody's kind of looking at it and wanting to do the same thing. So it's not a case of you're fishing for trades every day. Like if somebody says to me, I'm a retail trader and I'm a day trader, I'm like, mate, what are you doing? You're just trading against commercial business in the foreign exchange market. So if you looked at the foreign exchange market as an example, you've got commercial business and you've got speculatory business, and they're 2 totally different things. So the commercial element of the market essentially is what the foreign exchange market was set up for, to facilitate international commerce. All right. So you've got customers there that will be ringing in on a daily basis that have to trade. They don't trade because they want to, they trade because they have to. They've got invoices to pay, they've got wages to pay, etc. So they have to do foreign exchange transactions. But then you've got your speculators. And of course, speculators very much care about the prices that they're trading at. And so when you come to do your own speculation, you're just going to leave this commercial element behind, and you're going to wait until you get to one of these levels, and then you're going to trade for yourself. So the way in which retail traders look at it, unfortunately, it's all been misguidance, and all it's there for is to look extremely difficult to sell trading courses. As far as I'm concerned, some people might sit there and say, well, that's totally wrong, but that's just my own personal opinion, because if you really knew how simple it was, you wouldn't have. I mean, I had a poor chap that I was speaking to, after my presentation. He'd spent north of like £30,000 on trading courses. And it was just crazy, because he says it's just all the same regurgitated stuff, just repackaged and, bandied about by somebody else. So, yeah, I hope that answers that question.
Yeah. And but you definitely, so you don't look at any 15 minutes, hourly charts or anything like that. You are looking at dailies, weeklies, monthlies, I assume then.
You're looking at higher time frames, yeah, because you need to see the big picture. I mean, if I was to give you an example at the moment, if people were looking at the Japanese stock market, so the Nikkei, right, it's up at levels now that haven't been seen basically since the late 80s into the very early 90s. And it's still reacting from the same level. So the levels that were created back then are still being respected and traded today, even though you've had a whole generation of traders or a whole generation of human beings that have come along. They still use these levels to trade from today, and they get them from the past. So if to see the big picture, it is massively important. And just one thing to point out. So if I said, look, I want to trade from a specific price, well, that price is the same price on a 1 minute chart as it is on a 1 month chart, because it's price. Do you know what I mean? I'm not looking for candlestick structure. I'm not looking for confluence. I'm not looking for, we had one guy there at the thing, didn't he? Bless him. He was like, well, I use 2 very simple moving averages.
Mhm.
And I just stood there and I was just shaking my head, because I'm like, right, well, yesterday's moving average price ain't going to be the same as today's, and it ain't going to be the same as tomorrow's. So what significance does it actually really hold? It doesn't. It just is something to fill up your chart with.
So for a retail trader, obviously they're being taught all of this stuff that you're obviously seeing, you've experienced stuff that actually works, and a lot of retail traders are basically just chasing their tail, going over the same kind of things, basically trading their P&L, blowing accounts, and doing the same thing all over again. And one of the questions I had for you is, in London, was what do those traders do to get out of that cycle? And one of the answers you gave me is unlearn everything and start again. Now that's quite, it's quite correct, but it's very broad, you know. So what do they do? How do you unlearn something that you've been, you know, digesting from so many people off YouTube and this person and that course, you know? What would your suggestions be to those people that are looking to clean their mind out of everything, start again, and build a structure to get them to be profitable?
But the first thing is you should stop watching people on YouTube. Now, I understand the irony that I do have a few interviews on YouTube,
and this is going on YouTube as well.
So I completely understand the irony of that. However, it's a case of, I've always said, you know, look, if you're going to learn something from somebody, you always go and see an expert. Right. So if you want to learn how to play golf properly and you want to improve your swing, you go to see the golf pro down at the club. Right. If you want to essentially learn how to, I don't know, cook quite a decent meal, or cook something that's quite intricate, you read a book or you can watch a video. It makes you better.
Yeah.
The point I'm trying to make. So it makes you better. You watch things about trading and it makes you worse. And the reason is because it's not based upon reality. And this is what I say. So people are playing a simulated version of the game. It might look the same. It might smell the same, might taste the same, but let me tell you, it ain't the same. Right. So to unlearn, and I've had so many people over the years just go, right, the minute that they've started sitting down with me and we start going through, they're like, geez, I've unsubscribed to all of this stuff on YouTube. I used to spend hours on YouTube, maybe days, weeks, months, you know, hours and hours and hours. And you know what? I can't look at it anymore. I literally cannot look at it anymore. Now, look, I totally appreciate, look, people have spent money on courses and they've spent a lot of time and they've invested a lot of, you know, emotional part of themselves, and energy and stuff like that into trading. But then you have to realize, right, if you do feel that you're chasing your tail and you do feel that, you know, there's very many, you know, conflicting views, well, why don't you stop listening to everybody else, right? And say to yourself, okay, so if this market was set up for institutional use, not for retail use, for institutional use, what do those people do? Now, that information is not widely available out there. I mean, like I said to you before, oh God, there's probably from the UK, maybe 2 or 3, 4 people that have actually worked at institutions that are willing to teach people. You know, and when I say that you're playing a simulated game within the real game, so if I was to say to you, you know, kind of like latest figures, how much does the foreign exchange market turn over in a day altogether? So that's spot, that's futures, that's, you know, spreads, that's options. How much does it turn over every day? So it's $7.5 trillion a day, right? Massive number that not very many people can even comprehend the size of it. But if we swap this, right, so let's do that. Let's just do a quick swap over, right? So if I took 7.5 trillion seconds instead of dollars, well, mate, that's nearly 238,000 years in a day. That's a lot of money.
A lot of Lambos, a lot of skiing trips.
That's a lot of lunches, right? A lot of lunches. But do you know what I mean? So when people are claiming, oh, all that they do is they go for your stops, you know, retail traders are there and, you know, the institutions are taking you out, mate, come on. Even if you're trading at £10,000 a pip. Your volume is minuscule in comparison to what's really happening on a daily basis. So are they really going for your stops? Are they really plugged into all of the retail brokers? Oh, I tell you what, don't worry about institutional clients. No. We must stop out the retail clients. It's like, come on, leave off. That's not how it works. Do you know what I mean? And not to sound like Billy Big Bollocks, but when you're sitting on a desk or you're trading on a trading floor, retail doesn't even enter into your thought process because it's not there. So it's, again, how could you unlearn everything? Well, I advised one guy a few years ago, lovely fella. He admitted to me that he'd been, maybe getting 4 or 5 hours sleep a night. He just couldn't sleep. The trading was on his brain. He'd suffered quite a few losses. He said, look, my brain is fried. Can you offer any advice? I said, yes. I said, take every book, every DVD, every CD, every USB drive, all of it. I said, take it out in the garden, light the barbecue up and burn it all. And then see how you are, right? So I said it. I mean, I didn't think he was going to do it, but because he'd spent, again, this guy had spent north of like £40,000 on stuff. And then a couple of days later, he sent me a message. He said, oh, I did it. I said, oh, okay. How did you sleep? Best sleep I've had in years. He said, now I feel like I'm fresh and I can, sort of start to go again. So just strip everything back. No indicators, no, multiple time frame analysis, I mean, up and down 1 minute, 5 minute, 15 minute, hour, all this crap. Forget that, because that's not how the world is split up. It's not, you don't split your day up into 15-minute, schedules, do you? Forget all these indicators, because they're only there, as I say, they're only there to basically for analysts to make stories fit.
Yeah.
So, which is, part of their job.
Yeah.
So, as I've said to people, essentially, really, an analyst for me is just somebody that sits there and paints a bullshit story, send out to people, send out to clients, because clients like to read these things. So, and plus, if you if you ever actually read one, they are available online. Yeah. If you ever actually read one and then go down to the small print, and what does it say?
They've probably got in there before they release the news. They're probably in their positions, and you're getting out. They're your exit liquidity, or you're their exit liquidity, probably.
Exactly. So, how do you generate liquidity as well?
News
on the institutional side, right? Yeah. Well, you do the opposite of what you're telling everybody else to do, because when they want to sell, you want to buy, and when you want to buy, they want to sell. Why? Because you've directed them to do so. So it's all a big game. If you know what I mean, it's all a big game. But yeah.
Well, we're gonna have to keep this one short because we got the trading room, but I definitely want to get a part 2 out of you. This is part 1. For this part, though, where can people find you? Obviously, you're not that much on YouTube. If people look for you, you can find you. Hopefully, we can change that in the future and bring more content towards your brand. But where can people find you as well?
So if you go to YouTube, like you say, and again, I do understand the irony of this. So it's Paul Scott FX. If you type that in, that should come up. Website is paulscottfx.com. Go on there. It's not a very flash website. You don't have to sign up for anything. And basically, I just called it trading without all the bullshit. So you can find some of the previous interviews I've done on there. If you want to drop me an email, it's paul@paulscottfx.com. Feel free to do so. Always happy to have a chat and hopefully sort of try and put people on the right path.
Amazing. Well, we'll get a part 2, and I'm sure that's enough value, a little bit of a teaser for a lot of people as well. So thank you very much, Paul, and we'll see you soon.
Thank you very much as well.